Hey guys, Steven here, aka the Boiler Master, and I got a couple updates for you guys from IQST, and I got a full cup of coffee. So today we're going to talk about the marketing firm IQST just hired and their new cybersecurity services for telecom customers, and of course their current revenue growth, and then I might get Shane on at the end. I know you guys love Shane, he's the people's champ. But first, I got to remind you guys, I'm not a financial advisor. The only thing I advise you to do is to like and subscribe for more of my videos that are for entertainment purposes only. So let's get into some coffee and DD. We'll dive right into the revenue and growth first because I know you guys like that and not everyone wants to stick around for the full video. So, quick recap on Q2. We saw revenue was 78.6 million for the quarter. That was up from 51.4 million in Q1. So we had 53% growth quarter over quarter. And from Q2 last year, they went from 32.8 million to 78.6 million, which was 139.6% year over year growth, guys. So growth is definitely continuing to accelerate this year, the same as we saw last year. If you guys remember, 2021 and 2022 were both 44% year over year growth. 2023 was 55% growth, and 2024 is on track for over 100% growth, guys. So things are still accelerating, and just like last year, it's mostly driven by cross-selling organic growth. There were no acquisitions last year, and this year they acquired QXTEL. Now, if you guys remember, QXTEL was expected to add $80 million a year. We saw the Super 8K filing with 2 years worth of financials for QXTEL, and they've been doing right around $20 million per quarter. So since it closed the first day of Q2, we were expecting them to add about 20 million a quarter, being 60 million in revenue this year from the addition of QXTEL. But in Q2 report, we can see QXTEL already increased their revenue to over $31 million just in Q2. They literally grew an $80 million a year company's sales over 50% in a single quarter, from 20 million to $31.5 million. At 31.5 million per quarter, I'd say QXTEL is now considered a subsidiary at an annual run rate of 126 million a year, and they've only been part of IQST for 3 months for that quarterly filing. So if we look at the quarterly progress and the 290 million forecast, we can see they've already done 130 million for the first half of the year. So to reach the 290 million projection, they only need another 160 million, which would only be an average of 80 million per quarter in Q3 and 4. Now they just did 78.6 million in Q2, so I don't imagine they're going to have any problem achieving 80 million over Q3 and 4 and exceed the 290 million forecast. Now, back in January, I projected them to do at least 300 million this year, and it looks like they'll probably hit that without any issues at all. As for the company's projections, after announcing the QXTEL acquisition, they said the company would be on track for 250 million annual revenue, and then as soon as Q2 ended, they increased the forecast to 290 million. So what should we expect from the company the rest of the year? Well, they've been silent about preliminary revenue for the last 3 months. We didn't get a single word about July, August, or September's preliminary revenue. Now, I've been around for years, and I've never seen them stay this silent about preliminary revenue for an entire quarter before. Something's definitely up. Now, they've had occasional quarters where sales dipped a bit, but they still gave us preliminary revenue numbers, so this is really unusual. And the company is known for the second half of the year being even stronger than the first half. And when we consider the explosive growth from cross-selling QXTEL right out of the gate, it seems pretty logical to think that they're just taking a new approach here. I'd bet the numbers are beyond expectations, and instead of giving us teasers every month along the way, they're going to drop a quarterly report for a shock and awe moment. There's been too many times that amazing quarterly reports seem like a sell the news event because we already knew what to expect. So I think this time they're changing things up and going to let us all be surprised when they file a quarterly report. All we need is to basically repeat Q2 performance and we'll be fine for the forecast. Anything over $80 million would be phenomenal, being honest, because they only need to average 80 for Q3 and Q4. But I wouldn't be surprised at all if they do more like $90 million. And if that's the case, I'd expect another update to the official forecast once the quarterly report is filed, and that's due next month. We should see it by November 15th. So I'm definitely looking forward to that, and especially seeing how QXTEL performed for their second quarter, cross-selling with the other telecom subsidiaries. So I remain firm on my 300 million plus projection. I've been following the company for years and putting out charts, and they're yet to let me down on my growth projection. So for next year, I'm going to go ahead and hold off until we get the Q3 filing, but then I'll start putting some numbers out for my 2025 estimates because, as you guys know, the company is going to give an extremely conservative forecast for next year, like they always do. They underpromise and overdeliver every year, but that's why I put together what I think are more realistic projections based on the trends while still saying somewhat conservative, so we're pleasantly surprised instead of disappointed. So if you guys want to see those, make sure you subscribe so you know when that video drops. All right, so we covered growth. Now let's get into this week's major updates. So we got two. The first was a partnership with ONAR, which is a marketing company that's going to help with their rebranding of the telecom division, and I believe they'll be taking over a lot of initiatives like updating websites, helping with press releases, just everything related to marketing of the company. So the second update, they announced a partnership with Cycuron. I don't know if I'm saying that right, but it's a cybersecurity company and they're partnering together to offer cybersecurity services to IQST's telecom customers. Now, both of these are partnerships, not acquisitions. So I'm going to just give a brief overview of what's going on with them instead of a deep dive into their financials and stuff. But first, I want to say that partnerships are great because these are virtually no overhead. We can offer Cycuron services to our customers, and any sales are a bonus. We don't really need any new staff. We don't have to really develop anything. We don't even need to go find customers. It's just an upselling option we have to provide current telecom customers, and they should be able to start doing that immediately. So let's take a quick look at Cycuron first. Now, they're not publicly traded yet. They're in the process of doing a SPAC, which is a special purpose acquisition company. Basically, they're doing a merger with a company created just for the purpose of making another company public. The SPAC is currently trading on NASDAQ as WAVS. Now, that's kind of irrelevant here. I'm not saying to go buy the stock or anything. SPACs are a whole nother level of investing in risk, guys, but that's what's going on. It's a private company in the process of going public on the NASDAQ, which is cool because I found an investor presentation they put together in late 2022 when they started talking about going public in the first place, and that gave me a nice snapshot overview of the company. So it's a little bit outdated, but regardless, it shows some nice slides and shows us that back in 2021, they were already doing tens of millions in revenue and were up to 80 employees. They seem to be doing business around the world, and it showed their key customers, which already included Verizon and AT&T, which are major customers for IQST as well. So Cycuron's already providing cybersecurity services in the telecom industry. This isn't going to be anything new for them, and partnering with IQST should be the ideal situation. IQST does wholesale telecom across the entire globe, working with all the major telecom providers in every single region. So it's the perfect opportunity for IQST to upsell their current customers, offering another telecom product building on their core business. Now, I honestly have no idea what the real potential here could be, but it's cybersecurity, it's high margin industry, and IQST should have almost no overhead here, so there's nothing but good that can come from this partnership. Anything IQST can do to increase revenue and margins for their core telecom business is a major win because that's the backbone of IQST. Now, for ONAR, the new marketing company, that's considered a partnership as well. So they're actually going public too. It looks like they've completed a reverse merger with RELT, which is an OTCQB company. That literally just happened. We haven't even seen a quarterly report yet, and it looks like virtually all the shares are still held by insiders because there's basically no trading volume. They're still in the process of changing the company name, the stock ticker, clearing up the share structure, and again, I'm not saying that's a good investment or anything. I wouldn't personally go near it during this initial listing process myself. But none of that really matters much because we aren't looking to do business or sales with them like we are the cybersecurity company. We just need ONAR's marketing experts to provide some professional help with things like the telecom rebranding, website updates, press releases, that kind of stuff. So to me, this is great news because it means they're not far off from completing the telecom consolidation. If you guys remember, they've been talking about steps in this direction for a while. Small moves eliminating redundancies between the telecom subsidiaries, and then earlier this year they announced a complete consolidation of all telecom subsidiaries to operate as one business under one name, utilizing all the same platform as one large corporation instead of several individual subsidiaries. That's supposed to streamline services, make cross selling easier, and reduce costs significantly. Right now, we have too many subsidiaries with all their own CEOs and leadership teams, and each one has their own operating platforms, costing each of them hundreds of thousands of dollars a year. Consolidating all telecom operations should easily save a few $1 million a year in annual expenses. And I'm really not just making that number up saying millions, guys. If you remember, the first step of this consolidation was Etelix and Swisslink, and that alone was expected to improve the bottom line by 500,000 a year. So again, this is a great move by the company. We've got the consolidation and rebranding moving forward, as well as the new cybersecurity services we can offer to our existing telecom customers with a partner that's already got experience in providing cybersecurity to telecom companies. So I'm pretty stoked about all this. But let's see what someone else thinks. Let me see if I can get Shane on the phone, aka the Wolf of Winnemac. Hey Shane, how
Hello.
you doing, man?
Doing good, Steve. What's happening?
Oh, not much. Just made another video this morning. I was talking to you about, went over some of the big updates we got from IQST this week, man. And I tell you, dude, I'm pretty excited. I wanted to get your take on some of it, but there's obviously a lot to talk about. So as usual, man, why don't I let you kick off the conversation? Where do you want to start, man, with these new updates and stuff?
Yeah, you're not kidding. Updates of which there are many, and none of them were revenue from these last few months.
Yeah.
But I am the cybersecurity thing, I know nothing about and am incredibly interested in this. And, I would love to have somebody shed a little bit of light on that. Like, I'm willing to admit the stuff that I don't know a darn thing about. And that's the stuff what it's we went from no news for what 4 weeks to then kind of back to back this week, so that was pretty cool. The
Yeah.
new partnership to get a little bit of brand recognition out there, linking all the brands together, that's pretty darn cool. And then even if we just go back to the core of the business where we're doing 100% revenue growth from last
Mm,
year to this year,
mm.
that always keeps me going too. So any of that I'm really cool to kind of dive into.
Yeah, so I'm kind of the same as you. Cybersecurity is a bit out of my realm. I know enough to be dangerous. I understand it, and I know enough to know it's higher margin revenue than wholesale telecom. But one of the things I shared in the video, and I've
Oh, is it
shared with you,
really?
is that the company we're partnering with already does cybersecurity services for a couple of telecom companies. They've got Verizon and AT&T listed as some of their biggest customers in one of their presentations. So it seems to align perfectly with upselling the current telecom customers. That's what IQST does is wholesale telecom. Why not offer cybersecurity through it? Because that's what this company's already doing with some other telecom companies. So that's my knowledge on it, man. Is they're already in telecom and cybersecurity is higher margin. So I'm happy as shit about it. I don't have a fucking clue what the potential will be though.
So that's really a beautiful synergy as far as they're already offering the service and now these guys just piggyback right on it. Do we
Yeah.
have any kind of idea how much potential revenue slash profit that can add? Like, and of course, we're very embryonic with this news, so we don't know a damn thing about it. But is there anything that we can extrapolate from this and kind of figure out, okay, can this add, an extra 5%, an extra 8%? What can we
Well,
possibly be looking at here?
I'd say two things. The company they partnered with, I haven't dug into everything because I don't really care. I'm not going to invest in the company, but like I said in the video, I went through their presentation and they put that together in 2022. Part of them getting ready to go public, which is in process right now. Their 2021 revenue was $17 million. and that was 3 years ago. They already had 80 employees, so it's got to be a big growing company. They're going public, but it's cybersecurity is supposed to be higher margin. So I mean, even if it's a uh, $10 million over a year's time, if it's 20-30% margins, you're talking $2-3 million profit. So I don't expect this to be 100 million, $200 million in growth next year, but I do anticipate this hitting that bottom line a lot harder than some of this telecom growth does, just because of the margins. And when you're cross selling a partner's product, there's going to be a little bit of integration, but for the most part, I would imagine they sell their customers on it, but Cybercron, or what, however you say that name, is going to be the one doing all the behind the scenes work, not even IQST employees. So you're basically a middleman, just connecting the two, and taking a share of profits for selling the product.
That's what I was going to say is, we all know what IQST's big weakness is, and that's low margins. So then you bring in something that directly is combined synergy, and it's high margin. We might finally have a situation now where let's be, the margins were bad, but they've been improving.
Hmm.
But this might be the thing to kind of supercharge and get their business going and going and going. And Leo had said it kind of came at a perfect time, and he's right. Like, we're trying to crank up the growth while also getting those margins better and better and better. How cool is it if you can grow 50 to 100% every year while your margins drastically increase? I mean, once you turn the corner on that profit, you begin to have free cash flow, and that truly is the lifeblood of a company, because then you have so many things available to you that you can do with free cash flow. Now, we've all talked about the share buybacks. We've talked about buying more companies. But when you have cash, you do not have to dilute on shareholders. And I will be honest, the dilution that IQST has done has been very minimal to this point. I believe we began the year at 171, didn't we? And
172. Yeah.
172, and now we're at 185. So, in all reality, for what they've acquired this year and what they've done with it, they are extremely fiscally responsible. Like, I know I've been critical of Leo recently, but I also want to give him praise where it is due. He has done a phenomenal job. It's just there are other areas where I think need to be cleaned. They need to be fixed.
Yeah, I agree with you there. We've seen about something like a 9% increase in the outstanding shares, while they're projecting a 101% increase in revenue. So they're definitely adding a significant amount of value with the cash that's being raised. It's adding value for shareholders. So I'm not concerned about dilution, but I'm with you. They show some more profits, and they don't have to worry about dilution, and not relying on dilution opens up a
Yep.
million more opportunities for you. If we touch back on margins, a couple of things they have going on, I'm sure you're aware of, is they've talked a lot about that recently, and they explained that the voice services, the phone calls and connections, is only about a 5% margin, but the SMS, the text messages and stuff, is about a 20% margin. The majority of their business has been calls, and they're expanding on and trying to grow their SMS business, and just push all that with the same clients as part of this cross selling that's going on. And some of the increased business is more SMS service, which is about 4 times the margins as what the phone calls are.
Yeah,
So
no kidding.
hopefully we see the results of that in the coming quarters. That could certainly help. The other thing is that they have a lot of fixed costs. So as they grow, as Leo explained to me, he said himself, and he's right, is they can double the business without doubling their expenses. So even with low margin, if most of it is calls at 5%, and a small percent is text messages at 20%, well, as they double, their expenses didn't double. The overhead kind of stayed the same. The operating expenses, I tracked that. You've probably seen my charts there. The operating percent expenses as a percent of revenue are not going up. They're not, their expenses are not going through the roof because of this growth. So it's kind of an economies of scale. It's like Amazon. Jeff Bezos explained. He said,
We're,
"Yeah,
we're
we're losing money, but given a certain level of volume, we will be profitable, and higher and higher and higher volume above that will be more and more profit. We just have to reach the point of covering our overhead, and that's where
thank
IQST is at." They buy these
Same.
subsidiaries that have a little bit of profit, and that profit hasn't covered IQST, the parent company's overhead, but they're crossing over into that portion where it does.
You're right. And what you just nailed, see, that is an issue that people have brought up time and time again. They've tried to say that IQST is just buying growth. So you spend 50 million to grow 50 million, well, you break even. And that's only right at face value. But like you just said, when you go a little bit deeper into the situation, you have a breaking point where you get to a certain level and your growth doesn't continue to cost you. So then at that point, once you turn that corner, you're growing and growing and growing. And thank you for bringing up Amazon because that is the perfect example. Anybody can go back and we can look at Jeff Bezos' old quote where he talked about that, where all the metrics behind the scenes were improving day by day. Everything was just
Yeah.
skyrocketing. But then you look at the share price and it's nosediving down and down and down. And it's like you can almost layer that with IQST. It's doing the same thing.
Yeah.
And it annoys every single one of us. Like none of us are happy about the share price going down, sure. But at the same time, when you have such drastic growth and you can actually see what's going on behind the scenes, that should give everybody a little bit of peace of mind. The reality is they are in no threat of going bankrupt or having anything wrong. All they are doing is improving.
Yeah, I agree 100%. And I want to clarify, a lot of people get upset when you mention Amazon or Netflix or anything like that. And it's like, look, we're not saying this is the next Amazon. We're saying that, people freak out, why is the share price down? And it's like, well, look at Amazon. Everyone knows that company. And the period you were talking about, Amazon crashed 98% from its high. There's a
Right.
historic interview of Jeff Bezos explaining exactly that. That yeah, the stock's down about 98%, but during that period, everything inside the business has continued to get better. All of the metrics you look at, the company is doing better and better and better, and the share price just kept going down and down and down. And that happened to Amazon. That happens to Fortune 500 companies. That happens to all kinds of companies. There's like the stock market is not a perfect scenario where the stock directly correlates with company performance. The stock market's fucking crazy. Shit's all over the place. And Amazon's just a good example of a well-known company whose stock crashed 98% while the company was improving. And look what happened long term. You do
And
well
that's
long enough, eventually the share price will correct.
There you go. And that's kind of what we've said is when you do this in the long term, eventually it will get there. But man, it's we all know it's very annoying in the meantime while you're waiting for that to happen.
Yeah.
But yeah, we use Amazon because what other examples do people want us to use? Like that's the most relevant one that people can understand. And that's
Mhm.
kind of the key here because a lot of people don't do this all the time. They just look at a chart and they think that that's investing.
Yeah.
But that's the thing is we need to have things that people can associate with so they understand what we're trying to say here.
Yeah, yeah, exactly. And back to your point about just buying growth and buying revenue and profits and stuff, I posted earlier today. It's been a while since I've made a video, but I'm stay pretty active on boards. You know that. Um,
Mhm.
you know they they did make an acquisition this year. They bought QXTEL, but their 101% growth, the vast majority of that isn't even from QXTEL, the acquisition. QXTEL this year is going to add $60 million in revenue from the
It's
acquisition.
organic. It's
That's it.
organic.
Yeah, the rest of it's all organic. They're gonna add 60 million from buying QXTEL. There's another 85.5 million dollars in organic growth on top of that just from cross selling. So
Yep.
it's nothing. The acquisition isn't even half of this year's growth. And
Right.
QXTEL, you saw the quarterly report, man. They were only supposed to add $20 million a quarter. In Q2, the very first quarter that we owned them, they did $31.5 million. That's over 50% growth immediately after being
Immediately.
acquired. So yeah, it's not buying growth; it's buying the right opportunities. They are very, very strategic about identifying companies that complement the rest of their services that allow them to expand and cross sell and drive that level of organic growth. So they're not out there buying revenue. They're very strategic about who they acquire, and that is what I consider the secret sauce. Anybody can buy a company and add revenue, but buying one that can complement all of your other subsidiaries so everybody grows together and drives another $85 million in growth, That's what you look for. That's what I love. That's what IQST is really, really good at, like I've never seen from another company, man.
Yeah, no, we could brag on that all the time, and we would be right to, because I truly do not think that they get enough credit for how good of a job they have done with so little amount of funds or
Mhm.
so little amount of just extra cash. And that's why people bring up the Nasdaq so much, because of course the available money that you would have at that point, whether it's through a bond or through a loan, if they actually had 20 or 30 million cash to work with, they would be $1 billion company next year. It just, you look at the way that they've strategically implemented things under their IQSTEL banner
Mhm.
and then drastically grown those things. It's fantastic. And
Yeah.
you cannot look to other companies that have done anything like that. It's just, they're an anomaly, I feel. And correct me if you think I'm being bogus here, but I just think they don't get enough credit for that. And I wish the narrative could kind of shift to pointing out how great of a job they have done with such a small amount of money to work with. Because I continue to look to that when they have a drastic amount of money to work with. This thing will be supercharged. I mean, at that point, you can incorporate all kinds of new things that can really begin the profits and the free cash flow. And that's what I've been saying for a while, is once that free cash flow begins, you have a whole different company. And I think we're very close to that point.
Yeah, I agree. And like you mentioned about doing so much with so little, and this QXTEL acquisition. You remember prior to this year, their biggest acquisition, they'd never even acquired a company doing $10 million a year.
Right.
That was it. One of them was doing about 7 million, give or take. And then here they are out of nowhere acquire QXTEL doing just over 80 million a year. I I remember how fucking excited we were when that came out. It was like unbelievable. How are they even pulling that off? And what I want to get to, the point here is we started the year out at a 16-cent share price. They acquired QXTEL. QXTEL has already demonstrated over 50% growth since being acquired, and we are right back at the same share price we were when we started the year. The market has priced in absolutely no value whatsoever for the acquisition or growing its revenue 50%. It, it's
And that's
ugly.
it's so goofy, and that's what you said. The market is not a perfect machine. It's not a perfect instrument. It gets it wrong all the time. And like, the thing is, I believe there is about 20,000 shareholders in the company.
Mm-hmm.
Well, okay, the price is down. So whether there's nefarious entities shorting it down, or it's just people getting out because they're trading it, either way, they've not priced in the gigantic acquisition that happened, and there's probably more right around the corner. So it just makes me wonder, how are people not getting it? How are they not seeing it? And at the same time, like, what's the communication barrier to help them understand what's actually going on and why it's so close? Like, here's okay. I invested in it about 4 years ago. And if there was ever a time for me to be excited and doing cartwheels and backflips everywhere I walk, it would be right now. Like, they're on the precipice of doing gigantic stuff. I mean, and you can make the argument they do 500 million next year,
Mm-hmm.
like almost on organic growth alone, but just with incorporating Quextel and just their own organic growth, you could feasibly see 500 million next year without acquisitions. So it's like, what are people missing? Why do we see this, but so many people are missing this?
So, I talk about this a lot of message boards too, man. I personally think that it's not necessarily people are missing it. The guys like you and I get it. We talk to shareholders every single day that I talk about the stock with so many people message me about it. We all seem to get it, but we've all been around a long time. We've been at 20,000 shareholders for a long time. The guys like you and I, we've loaded up on shares for years. So when news like this comes out, we're not diving out to buy another 100,000. We've got a ton of shares already, and we're just, for me at least, I'm still just averaging in some regular buys in small amounts, just continuing to build. When big news drops, I'm excited, but it's not that often I rush out and buy another 50 or 100,000 shares because I'm already loaded up. and they're not
Yeah.
reaching those new shareholders that haven't heard about this, that have not loaded up. So the longs, great news, but we've already got our shares, and so I think the vast majority of the volume, the trading volume on a daily basis, just continues to be day traders and short-term swing traders that are just playing the charts. Good news comes out and they're like, oh, cool, maybe I could make a 5 or 8% profit on a swing or something. They're looking at support and resistance levels, and the stock after QXTEL, it went up to 39, rejected off of that, and then it just hit a very blatantly clear and obvious downtrend, and it stayed in that, and it just played out on that exact chart pattern for like 6 months straight. It just continued in the pattern, and I think it's just all the volume is coming from day traders. They're not reaching new investors.
And that's my thing. That's where I want to come in with that is how do you either reach new investors or invigorate your base? So I just mentioned there's 20,000 shareholders. We also know there is 185 million shares outstanding.
Hmm.
Okay, you take that 185 million, divide it by the 20,000 shareholders, that's 9,000 shares per person. Now, of course, we know some people have way more, some people have way less. But if you take that base, and I firmly believe this, we already have the people that we could spike this thing up in a very big way and really drive it up. But investor sentiment has been beaten down so much. But that's the thing they realize. There are a lot of people in this stock. If they all turn the other direction and just started buying some, like I said, again, over 20,000 people, that's
Yeah.
9,000 shares apiece split evenly. It does not take very much amongst all of those people to get this share price up in a very big way. And I wish people could see that because what's going to happen when 5,000 more people come in, or let's say maybe 10,000 more people, and they all want a couple hundred or a couple thousand shares a piece? It becomes very easy. Like right now, you've got what feels like all this supply and no demand for it. But that can change very fast because what I want people to understand is 185 million shares is not very many. We know there's a couple guys out there who have a few million themselves.
Yeah.
Some of us on this call may have a million or so.
Yeah.
So it's like there aren't truly that many shares out there. And I wish people would realize that. Should you ever get in an institution that wants 1, 2, 3, 5 million shares, there becomes a fight for these shares. And people don't want it at 15 and 16 cents, but ironically, they're going to buy it at 50 and 60 cents when it breaks through resistance.
I agree 100%. And it's like we say, buying begets buying. The
Yeah.
moment it starts back in an uptrend and it's just trending up based on charts, like it was trending down based on charts, everyone's going to think it's the greatest thing ever. The sentiment on the board will be bullish. Everybody be happy and buying more, while we're sitting here going, "Hey, man, the company was doing great. We were buying at the bottom, But when they see the stock price going up, they'll think it's a great company again, and they'll start buying. So to
Right.
each their own. But I don't know, man. It's
Hey,
3 years now. I We've been talking about this company for a long time, and we've had the same message for the longest time. If they continue improving the company, sooner or later the share price will react. And as we say, the market can stay irrational longer than you can stay solvent. And this is truly one of those scenarios that's testing a lot of people. A lot of people are wanting to give up because of it, because it feels like it's never going to correct because it's been 3 years. We've been sitting around a 30 million market cap,
right.
all of 2022, 2023, and 2024. That's where we closed. I don't know where we're going to close 2024, but we're about 30 million market cap now, and 3 years worth of growth, going from like 65 million in revenue to pushing 300 million in sales, and improving the bottom line from losing 5 or 8 million, whatever it was back then, to we're on and around break even, crossing into profitability. On top of that, 5 times your revenue growth, and we're still at the same market cap. It is definitely taking a while to react and trying a lot of people's patience. I'll give it that.
Well, and with that is take that a step further. Okay, what if you go 3 years in the future when they're probably going to be doing a billion revenue? The
Hmm.
profits would be so high at that point, you'd probably have 30, 40 million worth of free cash flow by that point. If the market cap is still 30 million, you can damn near buy back the entire shares outstanding at that point. So that's the thing I want people to realize. Although it's very daunting and annoying right now, within a time span of just a couple years, that will drastically change because they get so gigantic. They have shown us nothing that indicates the growth is going to slow down. So even if you do 50% minimum in the coming years, you're still at $1 billion by 2027. But here's the thing, what comes after that? Because they're so big, the growth can truly continue because then they will have more funds available to acquire all the small companies under their banner they can. They can also buy mid sized companies at that point, which can continue 50% growth every year. You are not going to have a 40 million market cap in the coming years. I don't know that you'll even have a 40 million market cap next year. I think you may be looking closer to 400 million market cap, which is closer to a fair value.
Yeah, I agree 100%. And that's one of the things I love about this being a holdings company is 2027 their target's to hit $1 billion, and that's not going to be a plateau. This is a holdings company. They get
Right.
up into the billions in telecom, and that's where we start seeing that growth being driven in the other non-telecom subsidiaries. They're already starting off in multiple industries. They're developing those, and when they're doing billions of dollars a year, they can acquire anybody they want. They can get into any high growth industry that they want to get into, and they're going to have those options. And like you said about the profits, is you're absolutely right. There is a timeline on this. The market, it can only stay irrational for so long because they will reach that point that some of those things that will become options on the table. People, I see on message boards, people demand a stock buyback right now, and it's like, well, they
They
can't.
can't afford that. Yeah,
Yeah,
they're still paying off IQSTEL. They cannot afford that yet.
yes,
But there
it's
will
not
come
an
a time.
option, but it will be an option. You give them a year or two, and all of a sudden, those options show up. When you can take $2 million worth of your profits and just throw it towards stock buybacks, you will drive the price higher. You can
Yep.
you can take $2 million and say, you know what, declare a special dividend. You will drive the price higher. Those are not options today, but they will be in the near future. And that's why I say, you know what, we're close. The light is at the end of the tunnel. No matter how the market reacts, a year or so's time frame, they're going to have 10 times the options that they have today to actually do something and force the market to react.
Exactly. And when you have that, you kind of have a way to double that effect because whoever is shorting the stock and the people, there are people here and there that are doing that.
Mhm.
But when you suddenly have the fear that the company can buy back shares on you, that then makes them unwind their position or not even have one. Like it creates a lot of doubt in people. Whereas now there's not a whole lot the company can do to fight back other than try to just get retail to buy. And that's the thing I wish retail would understand is like right now people are just running the board on the stock, but it wouldn't take a lot to stop them from trying to drive it down and just knocking it down penny at a time. It's again, there's truly not that many shares out there that can be maneuvered because so many of us are just holding the shares. Like a lot of times, I think there's only a couple million that are just floating out there regularly. And sometimes, sometimes longs kind of get rid of a few, but it wouldn't take much to just lock those up.
Yeah, and like you're talking about the average volume, it's around 300,000 shares a day. At this price, it's not even $50,000 in trades. They're doing all these investor conferences and roadshows and meeting with institutional investors and banks and stuff. And if one of them gets on board and says, I want to invest $1 million in this company and just start picking up shares, it would literally take months to acquire that when the volume is only 50 grand a day, because what can you pick up without just driving the price higher?
Right.
Maybe you could slide 10, 15,000 in, being very strategic, waiting on bigger sell orders to show up just to buy specific orders. But you can't just throw 100 grand in the company every day. You buy $100,000 worth of stock, you're going to drive it up 20, 30% because there's just not $100,000 worth of shares up for sale on any given day.
Exactly. And that's the kind of thing that I wish people would understand because it's like I'm not trying to fool people here and give them false hope. It's just when you see it for what it is, that's the reality of it. This price can move very easily. It just takes a small spark to ignite that flame.
Yeah.
And that's the You said you come in and buy $100,000 worth of stock and it shoots this thing up 40, 50%.
Hmm.
And it's like, what happens if you have multiple people, say they go to one of these conferences, you get a couple people who are interested, not even just one, get a couple different ones, maybe get a couple real big ones. It can change the dynamic of everything very, very quickly. And I hope people keep that in mind when they're kind of evaluating this entire situation.
Yeah, so with the shares, just you and I watch it. We see it every day, and we look at the order flow and what's out there on trades. And you can't get a large sum of shares unless it's at support or resistance levels. You push it up to support, yes, some bigger orders come in. Some of the traders and swing traders and stuff see that, and when you're testing up towards resistance levels, the guys that think it's going to reject will place some larger orders there, and you'll be able to accumulate a larger amount at those levels. But this intraday trading, just staying where we're at, 16, 17, 18 cents, just bouncing around here, there's just not that many orders coming in that are more than 20, 30,000 shares. We get them once in a while, but it's not that many. It's when you're at key levels like 39, 39 and a half cents where you saw some 300,000 share orders come through. So if somebody wants to come in and pick up, $1 million worth of stock, being I don't know, 4, 5, 6 million shares, they're going to have to push it at least to those resistance levels to get anything close to what they're trying to buy.
Yeah,
So
no, there's no
that
doubt
being
about that.
said, we know what they're doing to bring the institutions in. They're doing the investor roadshows. They're out there in front of them. They're meeting them. They're doing the presentations. They're really working their asses off trying to get there, which is not easy to accomplish. It takes time, and it could happen tomorrow. It could be happening right now. Somebody accumulating behind the scenes, or it may not happen for a year. We don't know. It's not easy to get institutions to invest in OTC companies, but what I want to know is what this new marketing firm is going to do for them that helps get awareness out there and spreads word to more just regular retail investors. We got 20,000, most of them are not active. We know they're just holding some shares, and there's not 20,000 people on message boards or anything like that. But how do we get word out there and get there's I don't know how many millions of investors in the U.S. that we're not getting our name out there to them. That's probably a question we need to get with Leo and Brad on, and just say, hey, what all does this partnership entail? What are they going to do for us aside from helping with the rebranding and things like that?
Yeah, those are definitely details that could help us all kind of as we're breaking this stuff down and figuring out what some of these new PRs are going to directly do. And I agree 100% with that. You touched on something about how, that could be going on behind the scenes right now with as far as how to reach new investors or institutions. I think back to how silent everything was right before the IQSTEL partnership was announced.
Mhm.
And at the same time, other than this past week, things have been very, very quiet. And just from the company kind of keeping the monthly revenues hush hush
Mhm.
and everything else that we've seen, it makes me ponder if there is something large that is going on. And there's a lot to be excited about, and I just hope people feel the same way, and they kind of know that this stuff was a much bigger deal than just at the surface level. Like the partnership with the cybersecurity company, that's a very big deal.
Yeah.
And just to understand like how that can drastically improve the business metrics, there's a lot to be happy about here. And I get it, we're all upset when the share price goes down, sure, but that's all going to change very soon. Things are ebbs and flows. We've seen this play out all the time. The bad days end eventually, and then you have good ones. And we're almost to the other side, not only on the share price, but also on the company turning to a new level. So that's my thoughts on it all, man. There's a lot to be really enthused about here, and I just hope people kind of feel that way.
Yeah, I'm with you 100%, man. You know me, I don't care so much about what the stock does on a daily basis. I want to know what the company is doing because I want to know where things are going to be 1 year, 3 year, 5 years from now. We all love money, and if it runs next year, cool, that's great. But I'm not looking for a quick profit for 50 cents or a dollar or something. I'm looking for an uplist to Nasdaq, and I'm looking for tens of dollars over the next decade or so because as long as this company continues expanding into new industries and growing double digits every single year, I look for this to be a company like that, a worldwide, nationally, everybody knows holding company a decade or so from now. Unless growth drops down into the single digits, I'm planning on holding a good portion of my position until that day comes. When this company plateaus, sure, maybe I'll start looking around and saying, let's reposition some things. But as long as they're growing 55, 100% a year and stuff, I have no desire to offload my position, because if it was at fair value last year, well, the company doubled in size this year. If it were at fair value this year, are they going to double in size next year and fair value is double? I mean,
Mhm.
you get it. You're a long term investor, and you do dividends and things like that. You get exactly what I'm saying. With that company value, you can project out and see what the underlying value of the company is going to do and what it has been doing over the last 5 years. So I'm not concerned about share price. I'm concerned about the underlying value, and that continues to drastically improve every single year
Drastically.
that goes by. So I'm happy.
That's exactly where it is for me, and I've said that on some message boards before. Is if I'm getting 10% return in my dividend stocks per year, but IQST continues to grow its business more than 10% a year, there's literally no reason that I would sell anytime, whether it's $1, $5, $7. It doesn't matter. If their business is continuing to grow at a higher level than my dividend stocks can return me, it doesn't make sense. And as you said, if they finally slow down to a point when then they're only getting 3% growth per year, well, then you look to reposition. But
Mhm.
again, this is the kind of thing where you can't continue to grow at the level that they are and not get there eventually. It will happen. And in my case, it's looking like, maybe it's another year, maybe it's another 3 years. I don't know. I don't have a magical crystal ball, but that's the reality of it. It's going to get there eventually. It's just how long. You got a lottery ticket. You just don't know when your number's getting called.
Yeah, yeah, and you're absolutely right. And the longer it takes, and we've explained this to people, the longer it takes, the higher the underlying value is. If you say 1x sale, one time sales right now, that's going to be what, over $1.50.
Mm-hmm.
One times sales next year is going to be over $2. One time sales of 2 years, 3 years from now is going to be three, $4, $5 a share. If it runs now, maybe it goes $1.50, $2. If it runs next year, maybe it goes to $3.50. If it runs in 2027, maybe it goes to 5 or 8 or $10. The longer this takes, the more valuable the company is by any valuation metrics you look at. You can't look at the financials and look at any valuation whatsoever without acknowledging and saying, yes, the underlying value does go higher every single year. So the longer it stays pushed down at a $30 million market cap, the higher that gap is between current value and underlying fair market value. And the bigger that gap gets, when it does correct, the higher it will run. It's not like if 3 years ago you thought it was worth $1, today you're sitting here going, wow, I still think it's worth $1. If you thought it was worth $1 3 years ago, you ought to think it's worth about $3 now. And so,
Yeah.
does that make sense, man?
Yeah, and again, I just hope people can see that too and have good conviction in it. And you may not always agree with what the company's doing, you might not always be happy about it, but at the same time, it's difficult to not be happy with what the company's doing as far as growing their business, because eventually that growth gets so gigantic it cannot be stopped. And that's always a little bit of solace that we can have here to keep us happy with things. Is it's going to get there. It's okay. The share price might be kind of crap right now, but that too will pass. And that's just how it goes, man. Um, we kind of darted all over the place, Steve.
Yeah.
Was there anything else that you wanted to get to?
No, man. No, I just want to get your take on a few things with the updates this week. It's always good to get other perspectives on it. And like people know, man, you're a full time investor. I am not. So you and I, when we get to talking about this stuff, I feel like we bring both sides of it. You do this full time, but I like to just nerd out and analyze the financials and trends and stuff. So we kind of bring complete different perspectives to it. So always good to bounce ideas and thoughts off each other, man. I appreciate it.
No, happy to do it. Let me know when you want to do it again.
All right, man. It sounds good. I'll let you go, and we'll be talking soon, and we're looking forward to that quarterly report coming next month, man. It's going to be awesome.
A lot of surprises, I'm sure.
Yeah.
All right, my man. Have a good one.
Yep. You take care, brother. Bye.